are there a few 2 or 3 tips that you could give me with, couples that are one person that is buying their first home, as far as things that they could start doing that it may take a few months, but they could, put things in order to ensure that, if their interest rate's higher, they may get of course they're going to get a better rate, savings, things like that. If you could, a couple of tips that you think would be some good advice.
I think, 2 things immediately come to mind. One would be credit. Right now, good credit's way more important than it has been. If you had terrible credit a year and a half, 2 years ago, you still get a 3% something rate. But right now, those that have lower credit are getting hit harder. So definitely work on credit, just to maximize that low rate potential, right? And the second thing would be having some additional money, not just to put down for down payment, but to throw at a couple different things. Like you mentioned, a discount point and buying your rate down. For a long time now, I've not been a fan of discount points. Normally, it's not worth it in my opinion. Every once in a while, I'll run the numbers. I'm like, oh yeah, that's worth it. But here recently, I just had somebody, they came to me and said they had all this money they wanted to put towards discount points. And it ended up being about 4 discount points, was slightly over. And in my head, I'm going, this is ridiculous. This is the dumbest thing I've ever seen. I'm not going to let this guy waste his money. But then I looked at the numbers and ran the numbers. And as long as he was in that house for 24 months, he made the money back. 24 months. Wow. And I was blown away. And I never in a million years did I think spending $10,000 in discount points for someone who, like in his case, was going to be in that house for a long, long, long time. That was his plan anyway. Okay, well, now that makes sense. So having some extra money to play with, and then there's another trick that I use that I'll share with y'all off the national scale of who could hear the podcast, because I can't tell my secrets to everybody. But it's everybody has heard of mortgage insurance and the devil that it is. And I always tell my first-time home buyers, mortgage insurance is kind of like Satan. Everybody has to deal with them. Nobody likes them. It is. Yeah, and so everybody has to deal with mortgage insurance, but there's some tricks to not necessarily get out of the mortgage insurance, but to get around the monthly mortgage insurance. So ask your lender those questions as well.
Pam, any tricks up your sleeve?
I definitely think credit score is first and foremost. I would say reach out to a loan officer if you're a first-time buyer and go ahead and make that relationship now. Now's the time to get prepared. So it may be not today, but let's get a plan in place. So 3 months from now, and maybe the interest rates will be down. Credit score is definitely one.
And they can look at your credit report. I know we've discussed this. They can look at your credit report, and there may be just some minute things that
would make a big
if they
difference.
Paid off, it would make a huge difference in raising that score, right?
Paying things on time, yes. Making sure they have the trade lines on their credit score, because some people don't want to have credit cards. Well, credit cards actually help if you take care of them like you're supposed to. So that's definitely the first thing. And then we have to look at debt to income. So that's not going to make a difference in the rate, but it's going to make a difference in whether you qualify for a house or not, and what payment you can afford, and then saving the money for the down payment, because that will make a difference. Higher credit scores and being able to pay more than just the minimum down payment is going to get you a better interest rate, which is going to pay off in the long run.
I'll interject here and make sure that everybody listening knows you do not have to have 20%.
You don't have to
down
Very true.
to buy a house.
Always nice. So.
Yeah.
It is nice to do, but you don't have to.
You don't have to have it. And, it's not a huge hit if they pay the minimum down payment, but their interest rate's going to look better because their loan to value will be in a better position. So those things definitely to consider.
And that's the situation where your payment matters. As far as looking at debt to income, that's more important than your interest rate, because it doesn't matter what your interest rate is if, as long as you can afford it with your debt to income, then who cares what your interest rate?
Home buyers, I would also say, is there a non-occupant parent that can be on it with you? Because of that, they can be, and they're willing to trust you in taking care of it, but they can be there just in case. Sometimes their income can help qualify.
Kind of like a cosigner type
exactly.
deal.
Right. Right.
I hadn't thought about that.
I should have shared that with, with the guys that run. But I mean, it's definitely, and the ones that I've done have done pretty well because, parents, it may not be their credit score that qualifies. Often it's the first time home buyer because theirs might be a little lower. That's just how it works.
Because they have more debt. Yeah.
Yeah, but the income of the parent can help them.
And it also, kind of going back to mortgage insurance, it lowers the
help that
risk. So the mortgage insurance a lot of times is a lot cheaper if there's, say, a cosigner that's well off, high credit with, no debt or something like that. It could really help.
Jeff?
No, actually, they pretty much covered it. The one thing I'll say is...
I'm sorry.
No, the one thing I'll say is that 100% every situation is going to be different.
Yes.
So the big thing is get with the loan officer,
Yes.
loan originator, whoever it is, and understand what your credit score is. What can I do to improve it? Why would that make a difference? What difference would it make? If I do have some assets and I'm a first-time home buyer, maybe taking some of those assets that I was going to buy right down with and paying off another debt would make a bigger difference in my monthly outlay.
Preach.